Well, here with us now is Edward Dowd, former BlackRock manager and author of Cause Unknown, The Epidemic of Sudden Deaths in 2021 and 2022. Ed, welcome to the show. You have seen kind of, I don't know how else to say it except doom and gloom coming in our future here, that this is just one of the, I guess, precursors of that doom and gloom. Is that right?
Yeah, so when I started to go public about the what I consider the vaccine issue, I also made comments about speculation to the effect that a global sovereign debt crisis was coming, and I warned people last year that this was unfolding, and this is really the acceleration process of it. About a month ago, over a month ago, I put out a tweet saying that I'm seeing a lineup of certain asset classes that augured bad news coming. And this is the first headline, Silicon Valley Bank. And also, my team and I have also noticed that the money supply M2 has a year-over-year change growth rate of below zero. That's only happened four other times prior to since 1868. The last time this happened was 1930. So what does that mean? That means we're going to see a panic, because all the other four times this happened, there were panics, financial panics, and it's begun. So I believe it'll be a slow panic, and I believe that there's probably consolidation of power going on as we speak.
So you think they're going to be collapsing these small banks, or do you think that they are trying to collapse them, or do you think this is just they can't help it? It's just happening on its own organically. I mean, what do you think is going on with that? In order to consolidate them to the few big banks?
I don't think they're doing it on purpose. It's the system is designed to collapse eventually, and I've been talking about this for a while. That in 2019 we saw evidence that it was starting to collapse with the overnight repo crisis in October, September of 2019.
Right.
The Fed was able to avert crisis by printing unprecedented amounts of money. M2 went ballistic, and now it is rolling over, and that's a rare event. The credit system needs constant flow. I like to use the Dune analogy: the spice must flow, and it's not flowing. So this is an inevitable outcome of the system, and it's designed to eventually collapse. So we're at collapse point. It's beyond the Fed's control. It's beyond everyone's control. But if you know a collapse is going to happen, wouldn't it be nice to take measures to consolidate power? And I think you're going to see, and I'm hearing from hedge fund friends of mine that they don't see how regional banks aren't getting into trouble here. And it may not be a plan, but it'll be the outcome, and there'll be a consolidation into the systemically important six big banks, is my guess.
Yeah, the too big to fail banks. So you think that they see it coming, so they're not necessarily trying to make this collapse. They just know it's going to collapse. And so now they're just trying to control that collapse and funnel
Correct.
it in a way that's going to work better for them in the end, or what they think is going to be the best agenda in the end, which is what? Going to those big six banks and a central bank digital currency?
Yeah, I mean, if you're going to introduce a central bank digital currency, which I've been talking about since I came on the scene, it seems like that's the end game. Because the debt-based fiat dollar system is in disarray, and if you want to do that, it's much easier to do it with six large banks rather than regional banks, and we'll end up looking a lot more like Canada.
Okay, so tell us exactly how this collapse is going to go down. So you think it's going to be slow. What can we see in the coming few months? Are we going to see more stories of more regional banks going under? Do you think the Fed is going to do the same sort of deal with them, where they make the depositors whole but let the banks collapse? Like, what do you see coming in the near future?
Yeah, I mean, so what they want to avoid, and that's why I don't think this will be fast like 2008. In 2008, they lost absolute control and panicked. I think you're going to see the Fed and the government do whack-a-mole, try to control this. Now, the big fear is they lose control, and then it's chaos, and it's a true panic, and we have a systemic problem. I think this is going to be more of a controlled implosion, and I've been advising, people, risk assets are going lower. So your best bet is if you have under 100K in a bank, don't worry about it. You'll be insured. But if you have lots of liquid investments, try going to Treasury Direct and just rolling 3-month T-bills and just wait it out, and then buy like the big boys when the headlines come out that the world is ending, which will be, anywhere between now and 2 years from now.
Okay, so you say $100,000, but isn't the insurance amount? I mean, people are now learning, oh, wait a minute, if I have more than a certain amount in my bank account, you mean I might not get that back if something happens? I thought that number was 250,000.
Maybe it
Is it
is. I'm old, so maybe they raised it. It's either 250 or 100. But go find out what it is, and if you're under that limit, you're fine. But if you're someone with like
a
$2 million
retirement? Yeah.
well, retirement is usually at a brokerage house or 401k. Usually there's options to move assets to money market funds, which I think will be safe because they're short duration paper, very diversified. So that's what I'm recommending to people. And there'll be lots of dips and counter trend rallies, and there'll be headlines that everything's okay. But I've been through this before. The Fed's going to start lowering interest rates soon because I've been monitoring the 3-month T-bill versus the discount rate. And traditionally, when we see three things happen, it's called what we call the checkmate chart. You see stocks have already peaked in January of 22. Commodities peaked in June of 22. The third thing we're waiting for is short-term interest rates to peak. And people will view that as bullish initially, that the Fed's here to save the day. That's usually when things get really ugly. And that happened in 2007 and 8. You got to remember they were cutting interest rates starting in 2007. We didn't bottom until 2009. During the 2000 to 2002 bear market, they started cutting interest rates in 2000. Stocks didn't bottom until 2002. So this is just getting going. This is my humble opinion, but you're going to see headlines coming of different things, different disasters, and it's just going to be whack-a-mole, whack-a-mole, whack-a-mole all the way down.
What is it that makes the system so unstable to begin with? You say that this was just designed to ultimately fail. Why is that?
Well, I don't know if they knew that going into it, but it's a fractional reserve banking system, and it's a debt-based monetary. All the central banks, except for the countries like Syria, Iran, Libya used to be, they had different central banks that weren't based on debt. Our central banks are based on debt. So when you print money, there's an associated debt with it. And the problem is it needs constant credit creation, constant flow. And when M2 goes below 0 year-over-year growth rate, that's usually a bad time. And they've put this off through the creation of the Federal Reserve. We had one last panic in 2930. But then they were able to put it off until the 70s when they delinked it from gold and put it on the petrodollar. So this has been they elongated this. This should have ended, a long time ago, but they fixed it. But now we're at the end game because the US dollar is in all corners of the world. The debt that's been created using is something called foreign dollar denominated debt, and that's choking the credit system. That's why Russia, China, and Saudi Arabia are all meeting to delink from the dollar. Basically, we're at the end of the US Federal Reserve currency as the world reserve currency. And what you're going to see is our government and the powers that be in this country try to save that. So whatever we see going on is a fight for who's going to control the world reserve currency status going forward.
Yeah, what is it going to look like when the US is no longer, when the dollar is no longer the reserve currency? I would imagine, are you thinking that there would be two reserve currencies of the world, sort of, not like the dollar would crash completely and just go away and be replaced, but that maybe there would be more than one? Which way do you see it going?
Well, so this is going to sound a little ludicrous coming from me, but I do think our republic has a better shot of maintaining the status because even though there's a lot of corruption in our country, the corruption in the CCP and Saudi Arabia and Russia is even worse than ours.
Yeah.
And our markets are the most liquid, and I don't think they're going to be able to come to an agreement and trust each other. So I do think the dollar is destined to ultimately fail up, meaning gain in strength as credit contracts, because when credit is growing, the dollar is weakened. When credit is contracting, the dollar goes up. So I think the policy right now is to have a strong dollar and to basically choke off the world and hold them hostage. So I think that's what's going on.
And you think that's going to work?
It's going to cause a kinetic war in my mind, inevitably. But once we get to the war, then all bets are off.
Okay, then you don't know which way it's going to go after that.
Yeah, exactly.
And the war is with who exactly?
It doesn't matter. Um,
Okay.
this is our central banking system is inherently unstable, and wars are inevitably the result. It's just the way. I mean, all wars are banker wars, and they have been.
Yeah.
And it's a fight for control.
Do you think that the war is because they're trying to control, they're going to start the war on purpose, or is that just something that happens when people get stressed out?
It's organic. So, for instance, China hit a demographic wall in 2020, and they're having internal debt issues on their own. And as they implode internally, their biggest fear has always been their own people. So you have to create a boogeyman
Right.
to rally against to unite the people, and the boogeyman will be us, whoever. It doesn't matter, but you have to create a boogeyman. So the system inherently creates this kind of dynamic, not every year, obviously, but it's every couple generations.
Yeah, and that's where it gets really scary because when you do look at history and you look at the wars, all the big wars in particular, it always roots down to a country in financial distress, right? And they're stressed out, they don't know what to do, and so they blame another group, and then it just kind of snowballs from there into, well, really avalanches into a giant war. And so definitely, if we're going to start seeing all these collapses or the continued inflation, banks going under, people, depositors. I mean, that is something that people, it's amazing. They haven't been able to fully wrap their minds around. Even with Silicon Valley Bank, you even look on social media, for example, and a lot of people were saying, "Oh well, these people should lose all of their money. They made risky investments," and it's trying to say to them, no, there was no. They just opened up a bank account. I mean, this wasn't an investment somewhere. This was a bank account that they opened up. The risk was having your money in a bank account, I guess, knowing that the insurance is only $250,000. But if you're a small company, you need that for operating. I mean, you need more than that to operate a company. If you've got, let's say, 10 employees that are full time, you've got salaries to pay. So, it just seems that people aren't even fully understanding of even really fully what happened with Silicon Valley Bank and the people, and they just, depositors losing their money. When a depositor feels like I can't even put my money in a bank and I might lose it, just opening up a bank account, that's a very dangerous place for our financial situation.
And that's why the
It's one
Fed
thing to
came in
risk
on.
it and lose it.
That's why the Fed came in on Sunday and did what they did. They have to ensure that people believe money is money good in the bank. So that I agree with that. But one thing that happened in Silicon Valley Bank that is a little absurd is a lot of these companies banking, these VC companies, the VCs themselves, banking with Silicon Valley Bank, kept enormous, ginormous sums of money in an uninsured checking account. And these are the people who analyze risk reward for a living, and somehow these are the same people who kept all their money in an uninsured banking account. And the other thing that's interesting is the VCs started a run on their own bank. Peter Thiel was involved in this,
Right.
and then they turned around and clamored for a bailout. So this is going to cause all sorts of consternation politically. It's going to cause all sorts of debates, but at the end of the day, the Fed and the government had to do it because they had to insure the banking system. Because if the banking system goes kaput, we are in Mad Max.
What do you think we should be replacing this banking system with? So the fractional banking, where the bank only has a certain amount of money and they lend out or buy bonds or do things with the rest of the money. What would you prefer to see?
Well, so that's an interesting question, and that's something I'll be working on eventually after this vaccine stuff. But look, the people who are running the show, the central bankers and politicians who got us into this mess, are trying to control demolition into a central bank digital currency. So that is a problem in that it delivers complete control of our lives. Now, we have to have a seat at the table, or we have to create a new table independently. So I can't tell you right now what I'd like to see. I just know that chaos is coming, and I do believe we, the people, are going to figure this out, and there'll be a renaissance on the other side. But it's going to get weird. It's going to get strange. I don't think the world's ending, but it's definitely going to change. And the question is whether we have a seat at the table or create a new table, or they do what they have been doing over the centuries, which is, behind back doors, create a system that no one really understands.
I feel like that's exactly what they're attempting to do right now, quite frankly. But okay, so just give us some basic steps. So the average person watching, worried about an incoming, do you think it'll be like a depression level or a recession level? Like what kind of level event are we talking about in the next, within 2 years?
Well, so whenever this M2 has gone below zero, it's ushered in a panic, not necessarily a depression, but a panic. And in a panic, asset prices go down because there's bank failures, and then there's, people are forced to sell things. So if you're the average person, you have a 401k, you have options available to you. Move a large, I'm not going to tell you what to do, but I would have a big part of my portfolio in a money market fund if that's the option is available. If you have money in the bank, make sure it's under the insured amount, And if you have more money in the bank, go to Treasury Direct and just roll 3-month T-bills. You can do it on their website. So this is stuff you can do and just wait it out. And then, when again, there'll be a time when the headlines are the world is ending. If you remember in 2009, the bottom was when they said the banks were going to be nationalized, and that was it. That was the end. And by the way, lots of people I know personally, lots of people who sold literally at the bottom. So don't be one of those people.
Right. Right. All right, Ed, thank you so much for being here. And I guess giving us the message of doom that's coming.
Well, it's not doom. It is what it is. It's beyond our control.
Right.
But just don't have fear. Be calm. Do what you can do, and then do what the big boys do. Buy at the bottom when everyone's selling.
Yeah, and I think the big question, I think what people need to kind of prepare for when it comes to the battle with the government and with the banks is to not allow a repeat of 2008, where they just consolidated more control. It wasn't, the people didn't really get anything good out of the collapse in 2008. It was just the people that made bad decisions got bailed out. And that's definitely what people were worried about. They're worried about that with SVB. They're worried about that going forward, bailouts for bad actors. But really also just the system wasn't changed to really benefit the people at all. It just seems like it got worse. And so I think that would be the big thing is once this happens, and we're in a crisis again, what is it they're going to do? Like you said, it's got to be we, the people, have to somehow get a seat at that table. I don't know how we're going to get it, though. They just seem so powerful. We never seem to be able to get, I mean, the more we know, but then the more we know does what? We're still not the powerful people that get that seat at that table, and that's the biggest problem.
I agree. And let's do a little history lesson on what happened in the great financial crisis. Not one banker went to jail. Not one. And so what ended up happening? Basically, Obama and Eric Holder, basically, I don't believe Wall Street took over the government. The government took over Wall Street. And basically, they paid huge fines that went into these consumer protection slush funds that then were doled out to NGOs, liberal, left-leaning NGOs. So we, the people, need accountability. People need to go to jail. People need to be held accountable for not only the vaccine issue, but the collapse of the system, the politicians, the central bankers. The good news is, I do think, unlike 2008-9, where there was, a lot of people didn't understand the system, more people have been educated on the system. And I think this vaccine disaster is waking up a lot of people. I used to feel very alone in my views. I know lots of credentialed experts now who think I'm dead spot on. So we're growing as a voice. So I think this time we've got a shot at changing it. That's my hope.
Well, I hope so too. Edward Dowd, former BlackRock hedge fund manager and author of Cause Unknown: The Epidemic of Sudden Deaths in 2021 and 2022. I know you're working on some more stuff when it comes to the vaccines. I look forward to talking to you about that, more of the stuff that you're uncovering. Would love to have you back to talk more.
Absolutely. We're doing a vaccine damage report. We're going to link excess deaths, disabilities, and another thing we discovered at the U.S. Bureau of Labor Statistics, absence rate data and work time data, and it's horrific, and it's all tying together.
Yeah, I've been waiting for that data. There's a lot of data out there that it's just a matter of waiting for the data to come in, just like excess deaths, right? It's like we have to kind of wait and see unfortunately. And then what we have to do is then parse that data out to look at, okay, which age groups were experiencing the excess deaths, for what reasons were they experiencing the excess deaths. There's all of this, but I do think all of that will eventually come out. Again, it just comes down to, will anybody be held accountable once it does come out? Will it
Well, what
be
I will say,
overshadowed by other news like a war?
yeah, well, I will say this, preview some of our work. The report hopefully drops in the next week or two, but one of the previews is this: work time lost in 2022 is 11 standard deviations above the trend from 2002 to 2019. It's horrific. So we have the dead, we have the disabled, and now we have the chronically sick. And it's all
Wow.
tying together, and it's all concurrent with vaccine rollout, and it's not explained by anything else.
All right, Ed. Well, we look forward to hearing from you about that. So thank you so much for joining us.
Thank you. Good to see you again.